Hey traders, Jason here from Lab Brothers. So in this video, I'm going to talk about identifying tops with technical indicators. Okay, I use technical indicators just to give me a little clue about what's going on beneath the surface. I know some people say I only look at the price, but I actually think some indicators give you an idea of what's going on that doesn't show up with price charts. Okay, when the market is acting really well, you're kind of rewarded for being lazy. You could sit back, you can let the charts, kind of run a little bit. You don't have to manage them that closely. But in the current market where it's kind of neutral, you're getting some decent moves, but a lot of fake moves too. Some breakouts are failing. It's just not as good of a market as it was last year. We got to manage a little bit closer. Okay, so when a stock goes up to a new high, maybe not even a new high, maybe just a 1 month high or 2 month high, and you're thinking, all right, this is it. This is the beginning of the next move. But some indicators are saying, not so fast. And issues a warning, like it's worth, in the current environment, it's worth paying attention to that. So I'm going to go through some charts here and how charts and indicators I use to identify, local tops. Because again, you could be in a stock, it looks really good, but then the indicators are telling you, you might want to be careful and you should listen to that. All right, let's go through this. All right, here's EOS, and this is the 2-hour chart. So stock doing well, although it's very volatile, and you have to note that. So what we have here is we have a relatively big move down here. And during the big move down, the RSI crosses down and the MAC, which had already crossed down. Okay, and that's fine. Okay, because you get a good move down, you're going to get some indicators that cross back down. But then what happens is this thing rallies. Okay, really solid rally. Goes to a new high. And the question is, should we get excited about that? I mean, that's a new high. It's a multi-month high. Like it would be legit to think like, hey, this is the beginning of the next move. The stock's going to rally, up into the 20s. But during that pretty impressive price rally, the RSI simply bounced, but didn't bounce very far. It didn't get up into overbought territory. It only bounced back to where it was, which was already at a depressed level, outside of overbought territory. But even more alarming is that the MACD couldn't even cross back up. Okay, so you have a really big move up. Price is at a new high. The MACD just simply kisses over here, and the RSI just kind of flags upward and then breaks down. Okay, so on one hand, if you're only looking at the price chart, you'd kind of get excited that like this is it. We just had a big move from 15.5 up to 18.5. The stock is at a multi-month high. This is the beginning of the next move. The indicators are telling you not so fast. Okay, now that doesn't mean I'm just going to immediately get out, but it does tell me that I have to be open to the possibility that this thing isn't going to just run here, and I need to nudge my stops up, because if it fails, I don't want to ride it back down. All right, next. Here is Nebus. Okay, volatile stock. Could easily trade in a 5% range day after day. So what we have here is we have a move down. This is a move up. Looks good. This is a move down. No problem. Given the personality of the stock, that's a very normal move down within an uptrend. Again, this is the 2-hour chart. But during that move down, okay, we have the RSI comes down to the 50 level, which is fine. The MACD crosses down, which again is fine. Okay, it's not a big deal. Stocks are going to do some backing and filling. The MACD is going to cross down. Then you get a move back up here. During the move up, the RSI simply flags sideways. Okay, continues to put in lower highs and just simply flags sideways. And as you can see here, the MACD crossed up for a single bar. This is a 2-hour chart, so a single bar, and then it crossed back down. Okay, so the stock moved down and then up, and you could have gotten excited about, hey, we got a multi-month high here. The stock's going to rally back up to 120 or wherever it was before. But the indicators are telling you not so fast. It's not completely accepting the move. In fact, it's kind of rejecting the move. And then, of course, you get a move down, and things accelerate to the downside. Okay, so if I'm in the stock and it runs to a new high, on one hand, I'm like, yeah, this is it. This thing could run here. But on the other hand, I'm thinking the indicators are rejecting this move, so I need to put stops closer and protect my gain, because odds are pretty good it's not going to last. Now, in this case, it gapped down. It happens. But the indicators were there. They were warning you ahead of time that this probably isn't going to last. Andis, let's see here. All right, what we have here is a stock that breaks down a little bit, comes off its high, and then there are repeated attempts to move higher, but each one of those attempts is just rejected, okay? So for starters, we have, higher high there, negative high here. So we get a negative divergence at the top. The stock moves down here, okay? No big deal. It's a strong stock. It's trending up. It can move down. That's not that alarming. During the move down, RSI crosses down, and as I just noted, the MACD cross down. It's normal stuff. It's fine. But then you get a rally attempt here, a rally attempt here, a rally attempt here. And look at this. The MACD just kept trending down. Each rally attempt, there was no attempt for the MACD to cross back up. They would cross back up for one bar right here, and then it immediately lost it. And the RSI was just like lower highs pretty much for, bar after bar after bar, day after day after day. Each one of these rally attempts, you could have said, hey, we got a resistance level here somewhere in wherever that is, 1425, we got a resistance level. If it can move up there, if it could pause for a little bit, maybe have a couple quiet candles, then it could punch through and run up to its high. I get it. I get that's how traders think. But the reality is every single attempt to move higher was somewhat rejected by the MACD, where it barely even upticked. Okay. So the price chart says, hey, this stock is basing within an uptrend. It could break out. The indicators were saying not so fast, not likely to happen. All right, Palantir. All right, so we have, and this Palantir had already been trading in a range for a couple months. Okay, so it moved up, it moved down. Really no staying power, past just a couple of weeks. All right, so we got higher high here. Lower high there. We got support line there. Okay, so stock moves down, normal stuff. RSI breaks the trend line. MACD, which the histogram had already formed a negative divergence, then it crosses down. Then there's an attempt to bounce here. Okay, it's a pretty impressive bounce from the mid 160s up into the mid to high 180s. That's an impressive bounce. You could legitimately think hey, this is it. This is we're putting in a higher low relative to here, and we're going to run back up to the high. But during that bounce, what happened is the RSI just simply moved up and then flagged, and the MACD ended up just kissing here and then falling off. Okay, so while you can get excited about the possibility that this bounce is going to go higher, the indicators were saying, no, it's probably not going to happen. The indicators were rejecting the move. Okay, so if you only look at the price chart, you're thinking, hey, this thing's going to move up. It's going to, let me delete this stuff. If you're looking at the price chart only, you're thinking the price chart moves up, then it's going to flag sideways and hey, this thing's going to break out. But the indicators were saying no. So you would miss, if you're not looking at the indicators, you're going to miss that. All right, Rocket Lab. All right, great company. Love the company. I've traded a bunch of times, made a bunch of money with it. If there was a stock I was going to buy and hold it for 10 years, I think this would be on my list of considerations. But, a long-term hold should not influence how you manage a position in the near term. All right, so what we have here is we have stock goes up to a new high. And then during the new high, let me get that line back here. During the new high, RSI can't really get up into overbought territory. Okay, not a great sign. But anyways, not a big deal. New high, easy to get excited about it. Lots of news and stuff out there about how the company is doing so great. Then we have a legit move down, normal stuff for a highly volatile growth stock. Pulling back from 100 down to 80 is pretty normal stuff. When that happened, we get a breakdown of the RSI. Okay, breaks down from a rising wedge pattern there, and MACD crosses down. Then we have a legit bounce attempt. Very easy here to say, hey, it bounced off, in the area of some lows here in the low 80s. Figure support is not an exact level, but an area. We get a legit, let me delete that just so it doesn't muddy things up here. We get a legit bounce here. But what happens is the MACD comes up and kisses, okay? It moved above for 2 candles, that's it, and then crossed back down. And the RSI just simply flagged basically into the bottom of the previous range. Okay, so you have a legit bounce attempt on the daily, on the price chart looks decent, but the RSI just flags, and the MACD can't even legitimately cross back up, and then the stock obviously falls. So if you're in the stock, this is just, what you see here with the indicators is just a warning that like the price is trying to move up, but the indicators are saying probably not going to go that far or last that long. Okay, so if you compare this to other areas, like the stock moved up here, came down, and moved up. Okay, it's kind of similar to stock came down, came up, moved down, and then moved up. The difference is when this moved up over here, the RSI came out of a base and just went up, 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 and the MACD crossed back up. Okay, same thing here. We got to move down or move up, move down, and then a move up. When the stock moved up over here, this RSI came out of a base, as you can see there, and MACD crossed back up. Okay, over here, the MACD couldn't cross back up with any type of force, and the RSI moved up for a couple days, like right at the end here, but then crossed back down. Okay, so the indicators were telling us whether we should or should not trust the bounce. All right, last one. Here is UMAC. All right, it's going to be the same thing. I'm going to sound like a broken record, but that's fine. That's how you learn as you look at chart after chart after chart until they kind of get ingrained in your head. So we got a nice move up to a new high, and then we get a legit pullback here from 20 to 16. During that pullback, RSI breaks a support level, and MACD crosses down. It's all fine. Then we get a bounce. During the bounce, RSI simply flags here. MACD fails to cross back up. So that tells you the indicators are rejecting the bounce. The indicators are telling you that might look good, that might feel good. You got a bounce from 16 to 18.5. That's, it recaptured more than half of the loss. Looks good, feels good. You might get excited about running to a new high, but the indicators were telling us it's not going to happen. Don't trust it. It's not going to happen. It's not going to keep going. And sure enough, it rotated back down. Okay, so that's all I got. The point here is that right now the market's in kind of like iffy shape. Some stocks are doing okay. Other stocks are breaking out, not lasting. We got to be a little bit more ahead of the curve, taking profits. When a stock runs up and the indicators kind of reject the move, the indicators don't also move up with it, you should be seriously considering whether you should take at least partial profits and move a stop up, or maybe take all profits. Okay, because in current market, where other than some precious metals that are running, we're not getting a lot of runners, which means we got to be kind of ahead of things, taking profits rather than sitting back waiting for a big drop to like finally force us out. All right, hope you got something out of this. We'll see you next time.